So Ford reported their numbers and $2 billion profit in North America from North American customers in the last quarter, but they lost money in every other region of the world. So the question is, why do these auto companies continue to ship jobs outside of this country? With me now, Wall Street Journal editorial page writer Jillian Melchior, and with Kingsview Asset Management, Scott Martin. Jillian, let me start with you. The numbers, for me, are always staggering, right? So I'm sorry for the fourth quarter. EBIT in North America, $2 billion. They lost $200 million in South America, $200 million in Europe, and almost $400 million in Asia. I understand comparative advantage and those kind of things, but at some point, does it behoove Ford to put up more factories and more manufacturing near their strongest customer base?
Well, I think they're making these decisions based on the economics. They're not necessarily making them based on country loyalty. But the economics of this, I think if you're reading through their earnings calls, they're saying that the tariffs are having a real impact. And we've certainly seen other, manufacturers in that sector, for example, Harley, moving to Europe to try to get around some of the tariff penalties. You're seeing the United States manufacturers are not only hit with the steel and aluminum tariffs, particularly in China, 25% retaliatory tariffs. They're a significant portion of last year. So I think a lot of it is, unfortunately, unintended consequences of the trade war, pushing them abroad, doing exactly the opposite of what we hope to accomplish.
I wish it was that simple, but this is long-term stuff. Todd, Scott, I'm sorry, that's been happening for a long time, and I'm wondering, did they make these bets? For instance, China, their auto market was terrible this year. It had the first down year since 1990. I think the whole idea is that they're making these bets on these other countries. And Americans, I think they're taking Americans for granted as potential customers, something that, that could come back to haunt them.
Yes, and by the way, Charles, you can call me whatever name you want, my friend.
Hey, with that jacket, I got to call you superstar, my man. You're looking good.
Hey, I like that. I'll take that, too, all day long. You know that. Jillian's right, though. You're right about the worker comment. I think the other thing to notice, though, as Jillian was kind of hinting at, it is economics. And if you look back a couple years, under a different administration, mind you, numbers overseas, Europe, amazingly, certainly South America, Asia, were better for Ford. We were seeing record profits or near record profits in those areas. So it probably made sense at the time, that Mark Field, CEO, was moving operations there because that's where they probably thought the growth was, Charles. But now, to your point, global growth is slowing. The American worker is back. We've got an administration that's friendlier towards business. So maybe that's why they're kind of late to the game on doing this. But I think expanding their American operations here is the way to go, given what we saw in the latest revenue reports.
We just had Mercedes open up a new van factory in South Carolina. They expanded it. They have 1,300 workers there. And by the way, they used to assemble these vans here, those Sprinter vans. Now they manufacture them. So it's kind of odd when I see Mercedes and these other companies saying, hey, we're going to continue to bring automobile manufacturing to America, but the homegrown names that we're supporting keep finding ways not to. And the tariffs are temporary, but, what was offset that was the tax cuts. These tax cuts have been an enormous benefit for General Motors and Ford and others. So, those are going to stay for a while. The tariffs, the barriers, the tariff stuff probably goes away. And then Ford's going to be saddled with some serious decisions to make. By the way, they're losing market share. And that's something they should be careful with. I don't think Fields was a great CEO. He was telegenic. Mm-hmm. People liked to interview him. And he was great on TV. But they lost a lot of market share under him. And that's got to be a red flag.
Again, I just think at some point, some of the tariffs are driving these businesses out of the United States. I mean, if you look at what was happening in China, they had, 6 years of just complete booming growth in the auto market. Then these retaliatory tariffs take place. And I think a lot of these companies are looking at this. There is uncertainty. They're not sure what the tariffs are going to be on steel, on aluminum, on auto parts that are key inputs for American-made cars.
All right, so
I think a lot of them are making a smart economic decision.
We'll check on it later on. But, by the way, profit-wise, the profit margins in America are so much better than anywhere else in the world. That's another thing. They are making, how can you make $2 billion in America and lose $400 million in Asia, $200 million in Europe, $200 million in South America, and say, you know what? It's too expensive to do business where people are keeping our company afloat. We're going to keep this debate going, especially after those tariffs are done, which I hope is soon.
Yeah.
Jillian, Scott, thank you both. You're both great.